Ladies and gentlemen, welcome. Today is December 8th, 2025, Monday. Hopefully everybody had a wonderful weekend. Unfortunately, as is always the case with Mondays, I have very, very bad news. According to our mathematical calculations, there's going to be a nuclear exchange between Russia and China alliance and NATO members. Allow me to elaborate. My name is Dvorkin, and I'm a managing partner at 4D Capital. We specialize in the very unique mathematical work that allows us to calculate the market in individual stocks in multidimensional space, and essentially when we do, perfect order emerges. On top of that, we've developed a number of very powerful timing indicators, and when we combine both, we can very often tell exactly what the overall stock market or individual stocks will do going forward. Now, what most people fail to realize is that this very same math allows us to predict geopolitical events and wars in particular. I'm not here to scare you, I'm here to prepare you. Once again, our work clearly indicates that there's going to be a nuclear exchange, and the meaning of the nuclear exchange, I hope you understand. Not the war is already happening, but the nuclear exchange between Russia and China alliance and NATO members, okay? So we're here to provide the type of analysis you're not going to get anywhere else, because while other people are talking about very similar things, very few people have the timing associated with this particular event. So we're going to tell you what it is during today's show. We're going to share a lot of other information. As a matter of fact, we're going to talk about Russia and Venezuela, whether there's going to be an attack on Russia or Venezuela, or if there's going to be a possibility of a Black Swan event on December 13th. December 13th is a very important time turning point. We're going to take a very quick look at the overall composition of the stock market. We're going to take a look at the Disney stock. We did an analysis on it a few days ago. I'm just going to give you a very quick overview and summary of exactly what Disney stock is going to do going forward. We're going to take a look at silver and gold and why Wall Street is trying to sell you a narrative that is currently in opposition of what's actually going on to both of those metals, so pay attention to that. We'll talk about interest rates. We have Fed interest rate decision this week. So just a wonderful, great show for you today. Hopefully you'll find it not only entertaining, but valuable in terms of all of the information you're going to be able to obtain through it. So first things first, let's shift gears and talk about December 13th. We're going to talk about Venezuela. We're going to talk about Russia, and we're going to talk about the possibility of a of a Black Swan event, okay, during this period of time. So December 13th, let me just do a very quick summary for you to tell you why this particular date is so important, or will be a very important marker in American history going forward. So we have an 84-year war cycle associated with the United States. 1790, the Revolutionary War in 1776, Civil War exactly 84 years later in 1860, exactly 84 years later we end up in 1944. I know World War II for the United States didn't start in 1944, but that's the year when we suffered the most casualties. And then if we bring it in 84 years from that date, we end up in the 2028, 2029 timeframe. This cycle hits many times. I've previously talked, just very quickly, just give you very good two examples of what happened in the past. So September 11th, 2001, as you know, very important date, but the United States entered World War II, not World War II, World War I in May of 1971 to be exact. If we bring that cycle 84 years later, we end up in July of 2001, just about 6 weeks prior to the September 11th event. So there was a margin of error that I always talked about associated with long-term time turning points. But sometimes that margin of error is not there. For example, this year, June 22nd of this year is when President Trump directly attacked Iran. And many people can dismiss this particular instance as, well, nothing came out of it, but not yet, okay? So this was just a time marker, and something's going to come out of it later on. That particular war is not over. The whole situation is going to escalate going forward. At least that's what our mathematical work shows, okay? So sometimes there's a margin of error associated with the time turning point, as we've seen, for example, with September 11th, and sometimes there isn't, as we've seen with June 22nd. So this December 13th time cycle has to do with a very important day in American history. As a matter of fact, it's the date date that we passed yesterday. So December 7th, 1941, and I don't remember any big celebrations happening yesterday, or even, perhaps some news channels did a little bit of coverage on it, but as you know, December 7th, 1941, the day that will live in infamy, was the official start of World War II for the United States when the Japanese attacked us in Pearl Harbor. Okay, so a very important date, a very important marker. If we take our 84-year war cycle and we project it into the future, we end up in December 13th of this year, right? So just a few days away, as a matter of fact. So what is it? 5 days away, right? On Friday or Saturday of this week, we're going to have December 13th. Definitely within the margin of error. The stock market is definitely set up with that. I previously talked about that, how we had this major sell-off a couple of weeks ago, and then we've bounced. And now we're perfectly, nearly identically, ideally set up for the market to complete this bounce. It hasn't completed yet, but to complete this bounce, reverse, and begin to accelerate lower. So we definitely within that December 13th time turning point. And if you remember my previous forecast, I talked about the dislocation that we've seen on the VIX. We do, once again, financial analysis. We use timing indicators, and we do see some sort of significant dislocation in terms of a volatility index and its association to the stock market. So everything is lining up to this very important December 13th time turning point, and its importance in terms of geopolitical setup of what's going to happen next. Okay, so the nuclear war, as you know, we've been projecting that it's going to happen nuclear war. The war is already happening, right? I want to be exact in my words. Nuclear exchange between the Russia and China alliance and NATO will happen in the summer of 2029, according to our stock market calculations, according to our war cycle calculations, and a few other indicators. So I published a book on it, explaining it in great detail. The link in the description of this video. If you would be interested, please take a look, order it, and I'll lay out the entire case for the whole situation of why it's going to happen in the summer of 2029. But this month, December 13th, is a very important geopolitical marker because something very important is going to happen. Okay, and there are three possibilities, of course: the war with Venezuela, the war against Russia, and there's another possibility that perhaps I'm unaware of a black swan event. Now, if you've been following our channel, you've been watching our videos, you know very well that we've been saying there's a 40% chance that there's going to be a war against Venezuela that's going to go terribly for the United States. We're going to get involved, we're going to get sucked into it, and it's going to be an absolute disaster. And that's very, very easily predictable, okay? Now, if you remember over the last couple of weeks, the entire media was coming out and saying, okay, the attack on Venezuela is going to happen this weekend. We're closing the airspace. Trump's coming out and saying we're going to attack Venezuela this week or this weekend. But nothing has come out of it. And if you pay attention, the news has kind of disappeared from the front pages. And I'll explain why that is happening in a second. If you recall, at that time we were saying that Venezuela is most likely a diversion from what's actually happening. What's actually happening is that the United States, despite this Ukrainian peace deal that nobody really talks about anymore as well, is being used as, once again, a diversion from what's actually happening. That's what's actually happening is the United States and NATO is preparing some sort of a decapitation strike against the Russian Federation. I know, it sounds absolutely sheer insanity, crazy. And I would be the first to tell you, but this December 13th time turning point is that important, okay? Sure, some sort of a dislocation in Venezuela can cause significant problems for the stock market and the US economy overall, but it's not big enough to cause the kind of dislocation that I'm talking about. And the only thing that can cause that is some sort of a conflict, direct confrontation with Russia. So if you know history, if you know how the Trump administration has behaved, for example, with Iran, with Hamas, with Hezbollah, where they attempt to do these peace negotiations, they set up meetings and then they essentially bomb those meetings, you can very easily ascertain that perhaps this is something very similar to this is happening on the Russian front, on the Eastern Front, where they are proposing the peace deal in Ukraine. They're saying, okay, the war is lost, we're backing out, nothing's going to come out of it. But in reality, what they're attempting to do is they attempting to deliver some sort of a decapitation strike against the Russian Federation, and this decapitation strike is going to take place around December 13th of this year. As crazy as it sounds, I know, because Russia is not Iraq, Russia is not Iran, Russia is not Venezuela. Russia has 4,600 nuclear weapons, and I bet you that half of them are pointing at the United States at this point in time. And even if they're successful in some sort of a decapitation strike against Russia, there is what is known as a dead hand, where there's going to be an immediate automatic retaliatory strike against the United States or its assets around the world. So I'd like to believe that it's not happening. I'd like to believe that it's not going to develop as I'm explaining, but something is telling me, particularly if you look at the whole situation with war with Ukraine is basically won by Russia. I have this very good video, for example, if you want to get the latest of what's going on, go to Judge Napolitano channel and listen to this interview with Colonel McGregor, and you'll see the truth, you'll hear the truth and exactly what's going on there, okay? So the peace deal in Ukraine, the situation in Venezuela, what we've been saying over the last couple of weeks or days is that is a distraction, right, for what's really happening behind the scenes. And what's really happening behind the scenes, I'm afraid, is perhaps preparation for some sort of a decapitation strike against the Russian Federation, okay? So one possibility is Venezuela, another possibility is a decapitation strike against Russia for this December 13th time turning point. And the final possibility is some sort of a black swan event that some people have been talking about, analyzing over the last couple of weeks, that perhaps I'm not aware of, but that is yet another possibility. So, but something is very important is going to develop around this December 13th time turning point. I'd like to say December 13th plus or minus 2 weeks gives us that exact window. We are definitely within the margin of error. We're very close to the point. The stock market is indicating that this bounce might be nearly over. And as soon as that happens, the stock market is going to be set up in a position where it's going to decline, attempt to decline quite substantially going forward. And I think that's going to happen around the Fed decision on Wednesday. We'll talk about that in a second. And that is also very close to that December 13 time turning point. Okay, so that's the situation in Russia. That's the situation in Venezuela, in the United States, and this particular war cycle. Okay, so with that in mind, let's talk about the markets. I'll give you a quick overview of what's going on with the Dow Jones and the rest of the indices. So this is a silver chart. Let me just pull up Dow Jones here in a second. So this is a 90-day chart for the Dow Jones. As you can see, basically what we had this significant sell-off and what we call a bounce. What we've been discussing in our service for a long time is that this particular decline was not structurally sound. Let me zoom in here for, this 90-day chart is perfect for this illustration. So what we've been discussing ever since the beginning of this sell-off is that the NASDAQ in particular left a significant gap here at NDX at 26,000. So we've been saying for a long time that this is a structurally unsound sell-off that we had, and then we are likely to bounce and close this gap before the market decides what to do next. And what the market is going to decide to do next is very simple as well. So you see this line, this is our mathematical calculations indicating a very important time and price juncture that basically stopped the market here on both NDX, XPX, and Dow Jones. Let's go back to the Dow Jones here in a second. As you can see, we nearly reached there as well, and that indicates that a very important top might be forming. I don't want to speak in exact terms because we have a paid service and we don't want to reveal the secrets associated with it of whether or not this was the top or we'll see a slightly higher high. So that's why I'm kind of beating around the bush a little bit in terms of these projections. Now, let me show you our short-term composition of the market, the short-term cycles that we have and we do. I think you're going to find it very cool. So this is the weekly cycle breakdown of what's going to happen throughout the week in the stock market. So as you can see here, for example, we have 4 short-term cycles developing today. One at opening, one at these are Eastern time, so you can verify. One at 10:30 a.m., one at 11:45 a.m., and one at closing. So what this typically indicates is that there's going to be a range-bound market throughout the day, most of the day, at least until let me point this out, 11:45 a.m. Eastern time. And then after that, there's going to be a directional move more or less towards closing. Whether it's up and down, I'm not going to discuss here. Here, for example, we have an opening. We have two cycles at the opening tomorrow, and that indicates that there is once again going to be a directional move. Whether it's to the upside or downside is outside of this premise of this video. But nevertheless, there's going to be a directional move throughout the day. And that's what we do. Basically, we scan the market back, we analyze it in multidimensional space, whether it's long-term or short-term, doesn't matter. What you're looking at here is a short-term composition, and then we project it into the future in order to identify exact turning points. And this is very short-term intraday. We typically don't trade any intraday stuff. But nevertheless, you see the abilities that we currently have. So let's do the Disney stock analysis very quickly. Disney has a pretty big following. Let me pull up this chart. If you want this is going to be a very quick summary, but if you want full analysis, we recorded the video, I believe on Friday, full analysis for Disney, what it's has done in the past, what it's doing now, what it's going to do in the future. So if you would be interested in this stock, please go to our channel. You will see that video there, Disney analysis. So basically what you see at the top and bottom is what we call cycle composites, and then cycle clusters. Once again, these are very simplistic representation of a very complex mathematical concept where we analyze the market in multi-dimensional space and then make projections going forward. The dots you see are three-dimensional calculations that indicates where any particular stock, all possibilities of where any particular stock will top or bottom, okay? So we can, this is all of them, but we can eliminate most of them when we do our analytical capability. So what is it saying about Disney very quickly? So Disney has been increasing into this particular juncture that is located approximately here, and it's going to supposedly reach that top in early of 2026. And then once that top is reached, it's going to decline into this mid-cycle bottom scheduled for late 2026, early 2027. At that time, a very important bottom is going to be put in place that it's at much lower levels than we are today, approximately $60 a share according to our mathematical calculations. And then from this bottom, it's going to surge much higher into this top that goes into 2031, at least according to this mathematical work. Okay, so very quickly, another representation of it. Basically, what you see here, this particular green region is our completion point. Once again, it's our three-dimensional calculations indicating where the stock is going to top or bottom. And in this particular case, that's where it's going to top before it rolls over and begins to decline quite substantially into that $60 a share target that we have. So once again, full analysis is available on our channel from a few days ago. Just click there and you'll be able to see it. So a lot of news are coming out about gold and silver. Let me go back and finish this war stuff. So why upside price targets for gold and silver are useless. Basically, a lot of the news coming out in mainstream media is indicating that gold and silver are beginning their run, and they have much more space to go to the upside due to various reasons, fundamental reasons, technical reasons, etc. As you can see here, for example, all commodity charts will look like gold. Perhaps actually that's true, but we've been saying that for a very long time now. And if we look at gold and silver in particular, you know that we've been calling for a significant top on gold and silver both. And let me pull up the chart. Actually, it's probably going to be easier to explain. So don't get sucked into this narrative for gold and silver that they're about to break out. So this is a 90-day chart. Let me go back to 3-year chart. And why all of a sudden it's not showing? Oh, I'm sorry. We're not looking at gold. We're looking at gold futures. Okay. Here we go. So these are once again our three-dimensional calculations. These lines represent our three-dimensional calculations. And what you're seeing here and what we've been discussing here is that the gold is topping as we speak. We showed you Newman Corporation, we showed you gold, and everything matches in terms of us having the ability to project this particular top. Gold and silver typically move, well, that's not necessarily true, but gold more often than not moves together with the market. So for example, if there's a significant bear market, then gold declines as well because of liquidity issues and et cetera, et cetera. So this is not going to be any different. Our calculations project that gold is going to decrease going forward, that the top perhaps is in or nearly in. As you can see, we hit right into our margin of error, or right into our mathematical calculations. It can possibly go a little bit higher. There's a certain margin of error associated with it, but it doesn't necessarily have to. The top that we have here at 43.98 is a very good top. And for example, if there's don't expect gold to surge much higher. If there's, for example, a Black Swan event associated with this December 13th time turning point, or perhaps there's a strike on Russia, or Russia strikes the NATO, whatever happens, gold might not go any higher, especially if there's some sort of disruption in the market because of liquidity issues. Gold is going to be sold just like everything else. Okay, so silver, very similar situation. As you can see, this particular line represents our three-dimensional calculations, and silver nearly reached it. It indicates it might strike a little bit higher over the next couple of days, couple of weeks, before rolling over and beginning its decline as well. So be very much aware of this narrative being pushed by the Wall Street that gold and silver will continue to skyrocket. Once again, our mathematical calculations suggest that's not going to be the case, and it's most likely topping as well. If you go to our channel, we have a full analysis for gold, and we don't do silver analysis, but for the gold, it's very clear. We're topping now. We're going to decline into the mid-cycle bottom, and then we're going to surge as the market bottoms together with the market to a new all-time high. So we're not projecting a complete collapse in gold and a significant bear market, but what we are projecting is a bear market, not necessarily a bear market, a correction, a pullback, which is going to be quite significant before a reversal later in 2026, and then subsequently a significant increase into 2030 time frame approximately. Okay, so that's gold and silver and other commodities. So now let's talk about the federal interest rate decision. I believe it's on Wednesday. I'm pretty sure it's on Wednesday. And quite a few commentators expect another 25 basis point. But if you know the yield curve, you know that the Fed typically doesn't lead, but follows the short end of the yield curve. And typically when those interest rates begin to decline, well, let me show you with the chart here very quickly. So what you're looking at is a 6-month Treasury bill. Let me zoom out here at year to date. And basically what happens typically is that interest rates begin to decline, and then Fed comes in on the short end of the curve. And then the Fed comes in and cuts by 25 basis points. So that's what happened here. They cut to 4%, it was declining, and they cut to 4%, it was declining, and they cut to 4.75. And now the anticipation is that it's going to decline to 3.5%. And they're going to cut again. But as you can see, it's not happening. The current interest rate is 3.7% as we speak, and it is closer to that 3.75 benchmark as opposed to 3.5% benchmark, which indicates the Fed might not necessarily cut interest rates, but even if they do, they're going to indicate or signal that perhaps they're done for the time being, because this is what you have to take into consideration. The stock market, this is the kind of problem that we're dealing with here. So there's significant dislocations in the financial system in terms of the amount of debt that we've generated on every single level, and in terms of the overall stock market, and the stock market being in a speculative bubble. Okay, so this is they don't talk about this, but they take this very serious, and they take it into consideration. Okay, so we talked about this particular chart before, Shiller PE ratio. Okay, at 40.46 as we speak. Okay, we talked about before that this particular top in 2000 should be lower. I did some adjustments, and according to my calculations, it should be at approximately 35 as opposed to what was it, like 42, 40, let me try to get 42, 43, doesn't matter. Because at 2000 top, there was a lot of companies in the S&P index that didn't have any earnings. So they had the P, but they didn't have the E. And because of that, it was significantly dislocated. But if you make those adjustments, then the P in 2000 top was approximately 35, okay? Why am I bringing this up? Because today's PE is in everything bubble. And as you can see here, it is much higher than 1929 top, which was 27.7. It is much higher than 1966 top, which was, what was it, 22. Much higher than, well, not much higher, but higher than 2000 top, okay? And definitely much higher than 2007 top, which was 27. So we're, you know, nearly 70% higher than the 2007 top. So the stock market is incredibly expensive. It is at the highest valuation it has ever been. And I would argue that it is in a massive bubble. And I'm not the only one to argue that. I mean, this ratio alone, Buffett indicator, margin debt, etc., all indicate that the stock market is in a massive bubble. So for the Fed to cut interest rates in this particular environment is very, very dangerous, because they understand when this market pops, they better have some firepower left where they can cut interest rates, even from 3.75%, 3.5%, etc., whatever it might be, down to zero again, okay? Assuming the market and bond vigilantes let them do that, okay? So that's a big question mark as well, because we have an inflationary environment at the same time where they're trying to cut interest rates into zero, and then becomes a very significant problem. So they're stuck in this situation where they are not necessarily wanting to cut interest rates at this point in time, because they need this dry powder for when the stock market finally cracks. And if you follow our mathematical work in terms of the overall stock market, you know that it's going to crack very soon, and we're going to have quite significant correction into the late 2026. So if we take all of that into consideration, we have to assume that even while the market is saying they're most probably not going to cut interest rates, or the market is saying you don't need to cut, stay where you are right now, that's probably a better explanation. Even if they push the envelope and they cut, they're probably going to come out and say that they're probably going to pause for the next interest rate cycle cut, and not cut going forward. And that will cause some sort of a dislocation in the stock market as well. So you have to take all of that into consideration. That's pretty much it for today. We're going to add yet another section into the mix of how to prepare for the upcoming war that we anticipate, or how we should prepare for the nuclear exchange that's coming, what you should do with your money, what you should do with possibly relocating, because at least according to our work, the entirety of Northern Hemisphere is essentially going to be wiped out and destroyed by what's going to happen in summer of 2029. So we're going to be adding that section going forward, probably over the next couple of weeks as we work on this video format. Hopefully you found it helpful, and we'll be back with quite a few more analytical videos over the next few days, probably once a day. But we'll be back with this geopolitical video, longer format video, probably on Wednesday. Okay? So with that in mind, thank you very much for your time. Have a wonderful day ahead. Bye-bye.